BenCowitzl.com. I'm going to give everybody a few minutes. Oh, there we go. Everybody, it took a second to go live. Hey, everybody, Stephen Cowitzl and Ben Cowitzl here, going live with one of our favorite topics, how to use automated profit booking strategy to maximize profits. It's a really good topic, and it was one of the most eye-opening things I've ever done. I'm going to give everybody a few minutes since we're just right at the top of the hour. I'm going to give everybody 2 minutes to kind of come in, make sure I don't jump the gun on getting started, give you an opportunity to have a seat, take some notes, and we'll have a good time today. Ben, how's it going?
Good, man. I got my coffee. Let's check the chat mode. Can anybody, you can hear us okay, can you type yes, loud and clear in the chat section? A little feedback would be helpful.
Chat mode. There's always a delay in the chat box. That's okay. Oh, man, I love Fridays. It is nice today, but I think it is supposed to rain this afternoon.
Yeah, but it was supposed to rain Wednesday. It rained for like 2 seconds. I bet, because it was supposed to rain hard this morning, I bet it all misses us.
I'm ready to get the campfire going again. I haven't used the backyard campfire probably since November when it started getting cold. Now, I love a campfire, but when it's 40 degrees outside and I'm 2 steps away from indoors.
Yeah. Now it's like this storm is definitely being pushed off till this evening.
Okay. Just to let everybody know, we are from Russellville, Arkansas. That's Central Arkansas. I would love to hear. I see some new names saying yes, that'd be great. I'd love to hear where everybody's from. So just type in the chat box. Tell me where you're from. Would love to know.
There must be a delay on the chat.
There always is. There's like a minute delay. So sometimes when I ask questions, it kind of takes a minute. You kind of got to wait for it. I don't know why that is. But it's fine. Staring at a nice window, seeing some flowers starting to bloom.
Oh, yeah, weather. Perfect. Golf weather.
Oh, yeah. San Francisco, that's one side, and then you got Virginia on the other. There's kind of opposite ends there. SoCal, cool. I was in San Francisco a couple years ago and rented a car and drove up Highway 1 and made it all the way to Seattle. That was one of my favorite trips. Traveled to, Jamaica and a bunch of those other Caribbean. I loved the road trip from San Francisco to Seattle. That was absolutely awesome.
Is that the one, though, where you were afraid of heights and you didn't love the side?
So there were some freak out moments. I'm not going to lie. And there were some moments where my wife told me not to look down. But I actually heard that it's a lot worse when you go from LA to San Francisco. Like the Highway 1 is a lot steeper, and we're actually looking to take a trip to Montana, to the Yosemites and a couple of those glacier state national parks. I hear the roads are even steeper, so I'm gonna have to.
Scary shit.
I'm gonna baby steps, right? We'll start on Mount Nebo. Okay. All right, I appreciate everybody, your feedback. I'm glad, it's Friday. We're going to have a good educational piece. I definitely am glad that you are here with me, and I respect your time. So we're probably will keep this right at an hour, just so you can, get a nice education, something to think about over the weekend, something to get on with your day. I promise you, you will learn something today. Now, the title of this presentation is called How to Use Automated Profit Booking Strategies to Maximize Profits, okay? So, and this is kind of the before, this is kind of the after. So this is an image, and we're going to talk about this a lot more. I'm going to get really, really deep into a case study. and we're gonna go through lots of numbers, and I'm going to show you the actual rules that how I came about, testing this. So let's get right into it. Who we are, who is talking right now. My name is Stephen Quitzel. I have my wonderful twin brother named Ben Quitzel. Ben, say hello.
Hello, everybody.
We both live in the working class town of Russellville, Arkansas. So we work together. We are the head traders and founders of the TradersPlan.com. A little bit about me and my stock market experience. I was a former financial advisor turned trader publisher, okay, which is in the position I am today. When I was a financial advisor, I worked in a practice with 60 million assets under management. I'm the author of the Expert Trading Systems, which you can go to Amazon and purchase for yourself, and the head founder and trader of the TradersPlan.com. What Ben and I are most proud of is that we have helped thousands of traders set up a rules-based system. And you're going to see a theme throughout a lot of the presentations that we give. We talk about rules-based. So we have helped thousands of traders set up a rules-based system. Okay? And that's what we're going to talk about today. But real quick, I want to make the lawyers happy. So I'm going to give you about 30 seconds to read that disclosure, and then we'll get into the good stuff. Okay, that lawyer's happy. Okay, so this is kind of a funny picture. Ben nabbed this, and I think it's absolutely great. But, I get emails, both of us, we get emails from traders all the time, right? And, trading is frustration management, so there are a lot of traders that get frustrated out there. But I would ask you, and this is a great opportunity for you to engage and just tell me what you think, drop in the comment box. Where do traders get repeatedly stuck the most? I'm looking for answers in the chat box. I'm going to give you a hint. It's not the actual picks or the alerts. So the question is, where do you think traders get stuck the most, right? Is it the entry? Is it the exit? Is it the system? Is it the portfolio management? I'm just interested to hear where... Well, we're getting a lot of answers. Proper exits. Anybody else? Well, I'm going to be honest with you. I think so far, and maybe it's just the title gave it away, you'd be correct, right? It's not necessarily the entries, it's the exits, right? And these are the types of questions when we get hundreds of emails on a daily basis. These are the kind of questions that we continue to hear over and over. Like, when is the best time to sell? When should I book profits? How long should I hold my stock? How long can this market go? Or when is the market going to correct? Okay. So there's always like, hey, I know how to buy a stock, but I'm not exactly sure how to manage the trade once I get in. I need to know when the optimal time is on when to get out, right? Where's that risk reward? And that is really, in a nutshell, like, when do I get out, right? That is the question, that the number one question that traders email us and ask us and get stuck. And it's honestly one of the number one things that you can easily change to improve your performance as well. Now, this is just a picture of a scanner. A scanner of any kind, doesn't matter. The scanner just tells you what stocks to buy. CNBC, Fox Business, all these TV pundits, they tell you what stocks to buy, right? What stocks they're in love with. Well, the problem with scanners and the TV is they don't tell you when to sell, right? And when they don't tell you when to sell, when to get out, they only tell you they own a stock, or a scanner only tells you what the stocks to buy, then you're still left to fend for yourself. You still have that nagging question, when do I get out? Now, that causes a problem because now you're going back and forth in your mind trying to pick the ideal time. So today, I'm going to teach you how to increase your profits from your trades, how to trade stress-free, and we're going to do this all using a automated profit booking strategy. How to use an automated profit booking strategy for both is going to help you increase your profits, and it's going to take a load of stress off your back. So these are the things that we're going to talk today. I'm going to walk through a real life case study with my trades just to show you how important getting where you're getting out, or at least automating the process, how much more money you can make. So it really started with years ago. I say years, several years ago. I was frustrated because my stocks that I bought kept going up, and I knew that I was leaving money on the table because I trade growth stocks, right? And the interesting thing about growth stocks is they tend to always go up further than you think they can go. Now the same is reverse. They tend to always go down further than you can go. They can go. You think they can go, because growth stocks, I mean, they're a little bit volatile, but there is a lot of money to be made in growth stocks. So I knew after I sold something, I was like, dang, you watch it go up. It's kind of painful, right? You're leaving money on the table. So I had an epiphany, and I was like, okay, because I'm always trying to figure out when the market's done, when the stock is done, when should I book profits, I decided to put this to the test. So I tested my discretionary exits, like just when I thought the stock was done or when I wanted to get out, my feelings, right? When I thought the market was done versus letting the stock tell me it was time to exit. So I took where I actually got out versus several automated exit plans to see if I just would have followed any rules-based approach other than my own discretionary approach, how I would have fared, right? The results were really mind-blowing. It was kind of bittersweet, because at the same time I was like, man, this makes me sick to my stomach, right? But at the same time, I was like, I just came across a gold mine. I came across something, I created something that is going to allow me to make a lot of income, for life, really. So in this initial study of 20 trades, every single one of the automated strategies that I tested beat my actual performance by a minimum of 400%. I mean, you talk about a gut check right there, and that really happened. So again, on the positive side, I was like, well, I really came across something that's great. On the negative side, you're like, dang, look how much I really, really left on the table. So I took 20 trades for the initial case study. This is really where the case study is starting. Okay, so this is real life. So I said, okay, I'm going to take these 20 trades, same entries, same stocks, same everything. All I'm going to do is change where I think I should get out versus I tested it against 4 automated profit booking strategies, means the rules told me when to get out. Okay. So just this one right here in this 20 trade case study returned 442% more, right? So you have my profits way down here, right? Versus what I should have made. Now, this is in hindsight, based on the automated profit booking strategies I put in place. That's life-changing right there, right? If you can make that much more money, all you're doing is literally taking your decision-making, you're taking yourself, your emotions out of the equation and letting the rules tell you when to get out. You can make a lot more money. And I think this right here case study says it all, okay? So I want to actually give you the rules for each strategy, and I'm going to walk through them one by one, okay? So every rule is a little bit different, okay? So let me explain these to you, and then on the next slide, we're going to look at the actual initial 20 trade case study that I put myself through. So I have E1, which is my actual results. This is what I did in the first 20 trades, okay? E2, it's very, very simple. By the way, all of these are same entry. Remember, same stock, same entry. All I'm doing is just changing where I get out. Okay, so I took myself out of the equation and I created some rules. So E2, so I'm going to enter right? Same place I enter here, but instead I'm going to sell half at 8%, and then I'm going to raise my stop to break even. Okay, so I sold half, I raised my stop to break even once that happens. Then I'm going to let the rest of the shares run until they break the 50-day moving average, right? As long as it's above my break even or whatever first. So really what happens is once I raise my stop to break even, I wait for the 50-day moving average to move above my break even. Once that happens, then I trail behind the 50-day moving average. So what you're doing is you're giving your stock an opportunity to run. You sell half, you book partial profits, and then you're saying, okay, maybe this stock, comes back and stops me out at break even. So you sell half at 8, you sell half at 0, you net at 4%. That's a nice little income trade, right? Especially if you're doing that once a week. But there are those stocks that don't want to stop, right? They want to keep going up. So I allow myself half shares to let it run until it breaks the 50-day moving average. Okay? Pretty simple. Nothing complicated. Just using price and moving averages. Rule number 3 is very close, but a slight variation. Okay? So rule number 3 is I sell the same half at 8%. And then I use my original stop loss. I don't raise it. I keep it in its place. Let's say it's minus 10%. And now once the 50-day moving average moves above the break even, then I trail behind the 50-day moving average. So the only difference between the two is I'm not raising my stop, right? Right. So once I sell half at 8%, then after that, my 50-day moving average is my new trail. Okay, slight difference. So they're going to be very similar in performance. Just there's going to be, I'll explain to you, why one could be slightly different than normal. You can write these down, by the way, but I'm going to go through lots of examples. So far it's pretty easy, right? Rule number 4, E4, use my original stop loss or my 50-day moving average, whichever comes first. I'm not selling half at 8% here. So for example, you have to excuse me. I think pollen is getting the best of me. So for example, if you buy Apple at 100 and your stop loss is 90, right? And let's say your 50-day moving average is at 89, just below your stop loss. When that 50-day moving average starts to go up, you're trailing behind that. All right, so it's just that simple. We are not selling half. So this is real. This is true trend following. So when you get a big winner, right, this is where you're going to make the most money because you still have a whole position. You didn't sell half. Okay, E5, sell it all at 8%. So the difference between these two are night and day. This one is you're booking nothing. You're letting it run until it hits the 50-day, until it breaks the 50-day moving average or the original stop loss, whichever's first. E5, you're selling it all at 8%. Okay? My rule, my results 2, 3, 4, 5, right? These are the strategies that I tested against with. Here are the results for better or worse, right? And so look, so these are the tickers right here. These are the trades. This is a 20 trade case study. Same entries for absolutely every single stock. Okay. My actual results, I averaged 1.12% per trade out of 20 trades. That's not bad if you're short-term swing trading, but when you're swing trading growth stocks in a bull market, stocks can go up a lot more. I had a 60% win ratio. Again, also not bad. You're making money and, you can total these returns up. If you're at, that's, over a 20% total return, that's still okay. But can you make more, especially if you're trend following growth stocks? So I said, okay, let's go over to the E2 strategy, right? And the E2 strategy is same stock, same entry, except for when it goes up at 8%, I'm going to help sell half, raise stop to break even, and let the rest run until it breaks the 50-day moving average. All I did. Look at the difference, right? This is a 500% difference between, my actual results and just automating it, right? Not only that, I increased my win ratio. Now, why did I increase my win ratio? Because there were a lot of trades that went up 8%. You can look at this string of 4% wins. There was a lot of trades that went up 8%. And when that happens, I raise my stop to my entry or my break even. And then they roll back over and hit it out, right? So I sell half at 8, I sell half at 0, and net 4. So if you look at it, this batch is better than this batch, right? And the reason that is because on this batch, I didn't sell half at 8%. I just let it go up and let it come straight back down. On this half, I was booking partial profits on the way. This is going to cause for a smoother equity curve. Okay? E2. E3 is only slightly different. The only difference between E3 and E2 is that I'm not raising my stop to break even. I'm leaving my original stop in place, right? So my original stop or the 50-day moving average, whichever gets hit first, right? But I am still selling half at 8%. So I'm selling half at 8%, but I'm not raising my stop to break even. Just slightly different. So it did a little better, but it had a slightly lower win ratio, okay? Now let's go over to E4. Now, E4 is true trend follower. If you are a true trend follower, you understand that true trend followers are going to have a lower win ratio, but your net profits are likely to be larger because when you hit a big winner, right? Like let's say JD was 24%, you're going to make more than any of these, right? Because you still have your whole position, right? So when you do hit that winner, when it does decide to keep going up, you have a whole position, okay? Now here's the downside to E4, and you're going to see this more on the next batch of trades. The downside of E4 is you're going to make more, but the win ratio is always going to be lower. It's always going to be lower because you're not booking partial profits, right? Because there's going to be that batch of trades that goes straight up and straight back down. And if you book partial profits like in these two, you're going to save yourself from, larger losses and just take small wins. Okay. This is very hard to stick with, and I'm going to show you why on the next batch. Now, E5, this was kind of interesting. This is what you need to say something, Ben?
No, sorry. There was a question on the E4 stop loss.
What is the original stop loss on E4? So that's a good question. During this case study, I had discretionary stop losses, based on support. At this point in time now, I just use a 10% stop loss on everything. So because this was years ago, right? This is before I added more rules. So the stop losses, so now I would say the stop loss needs to be 10%, right? But back then I said, okay, if a stock is 5% above support, I want to use a 5% stop loss kind of thing, okay? So E5, we go over to here and it's sell all at 8%. So look, 16 straight trades of 8%. I mean, who would not be happy with that, right? You'd be tickled to death with those kinds of numbers, and it had the highest win ratio, okay? But as I'm going to show you on the next slides, right, usually when you have the highest win ratio, you're actually going to make the least amount of money. So when you see other publishers and newsletters, promoting 90, 80, 90% win ratios, actually the wins are so tiny and the losses are usually much larger that at the end of the day, your account doesn't grow what you think it's going to grow, right? It just feels good because you have a higher win ratio. It feels good, but your account's not growing to it. Whereas if you use a balanced approach, but you can see this one had the highest win ratio right here, but it made the least amount of money on all of them.
Except discretionary.
Except, yes, Ben, thank you for kicking me while down. No, Ben's right. Ben's 100% right, except for my discretionary. And I understand that I love putting this out here because I love showing you these kinds of case studies because I've made mistakes. But when I make mistakes and I correct them, and the correction is so simple, but yet so game changing. I love sharing this with people because they can see, hey, even this guy, just tweaked a couple small things and it moved mountains. Because again, I'm not changing the systems. I'm not changing the picks. I'm not changing the entries. I'm just taking, this is me. This is my emotions. This is when I think it's time to get out, right? This is when all these other ones are when the market thinks it's time to get out or when the stock thinks it's time to get out. Okay. It's a good point. That's fair. So I like to put myself out there. So I hope that, when I put myself out there and show you these, I hope you learn from them. I hope you take this and I hope it really inspires you to do it yourself. You can do it with a small batch. This whole thing probably took me an hour to do. All I did was take my last 20 trades, my actual results, and then I said, okay, what would I have done if I just would have slightly tweaked them? So let's switch on, and we're going to go back to the spreadsheet, just kind of FYI. We're going to go to the next batch of trades because I try to be better, all right? So let's look at this from an income per trade standpoint because I know a lot of people that are on this and a lot of the people I work with, they are of retirement age or approaching retirement age. So when you take a trade, you are thinking, okay, how much can I make on a weekly basis, right? Because a lot of these trades are once a week. So in that first batch of 20 trades, I made on average $111.75 per trade. Versus on the first batch of 20 trades, I would have made 500% more on any one of these. Any one of these, right? Even the one with a low win ratio, I would have made significantly more. Again, painful to see, but it's eye-opening, and I was actually more happy than sad because I was like, awesome, I just solved the problem. Now I got to execute on the next batch, okay, to the best of my ability. All right, so you can see right here, my profits, this E2, I'm going to explain a little bit more about this. Okay, so now here is the next batch of case study. This is the first batch was trades 21 through 20, and this is another batch of 21 through 32. So this is an extra 12 trades. So here was my logic. I said, Steven, I looked at myself in the mirror. And I said, Steven, you're going to do better, right? You can do better. What I decided to do was mirror E2. Because it matched my personality. And I'm going to talk more about that here in a second, right? Pick the one that matches your personality the best, okay? So I said, Steven, I'm going to try to mirror E2, okay? The best of my ability. I still made a couple mistakes. I made 2 mistakes, right? So on these 12 trades, E2, which is what I was trying to do, which is sell half at 8%, raise stop to break even, and let the rest run, okay? So this next batch of 12 trades, the average win per trade was 13.5%. And even though I did so much better, up from my 1% per trade, I still messed up on 2 trades, which threw my average off. I messed up on a Bitcoin trade. I messed up on a biotech trade. Because you can see right here, this doesn't match this and this doesn't match this. Okay? I tried. Did the best I could. There was just 2 trades that I messed up on, but I did a lot better. All right. Sometimes change takes a little bit of time, and it did for me. So I saw this and I was like, Steven, you have more work to do, right? You need to follow the rules to a T because clearly, even when you try to follow the rules, I obviously mix and match my own analysis with these 2 trades, and it cost me. Right? It cost me several $1,000s. I just took 2 trades out of the 12, and they were the biggest winners, and I couldn't wait. I booked profits too early, and it cost me. So I think even highlighting the mistake I made in the next batch gives even more confirmation why you need to stick to the rules no matter what. No matter what's on the news, no matter what you see, no matter what you think the stock is going to do, go, whatever, you stick to the rules. But here's what's interesting. So on the next batch of trades, you can see that some of these went gangbusters. You can see the E4 where we're not selling we're not booking any partial profits, had some massive, massive winners, 135% winner, 169. And all we're doing on E4 is buying and holding the whole position until it breaks the 50-day moving average. It couldn't get any more simpler than that, okay? So, and on the next batch of trades, look how lower this was, where you're selling it all at 8%. You went from a pretty nice rate of return on the first 20, right, to another batch that doesn't look so good. So let's look at all the actual trades combined right here. So this is the net gain per trade. So when I averaged my first 20, which was embarrassing to say the least, versus my next 12, where I did 9.35%, I averaged 4.21% per trade. That's not bad, and I'll take that just about every day, right? Because this was actually a pretty good batch of trades, right? I think between 4 and 5% per trade, I think that should be the average, right? Kind of in that range. That's realistic to expect over 100 trades, okay? So my win ratio was 62.5%. But again, look, what if I just would have done E2, right? I would have doubled my performance and my win ratio would have been so much better. Okay. And again, this down here is all trades combined. So let's look at E3. E3 is where same thing as E2, but we don't raise our stop loss to break even. Okay. It did slightly better, but it had a slightly lower win ratio. Okay. So very, very similar. E4, look how much money it made, right? I mean, it averaged 13% per trade over 32 trades. Sounds great, right? When I said true trend following rules, and true trend following rules, they're going to have lower win ratios. They just are, because you need to catch a big trend to really help boost your overall average. So with true trend following rules, over 30, 40, or 50 trades, you're going to make the most money, right? As long as you choose right, don't pick a bunch of dogs, you're going to make the most money. Here is why I would advise against it, right? Because most people say, well, I'm just going to take the one that makes the most money, right? It has the lowest win ratio. This is going to test your pain threshold many times over. We all have pain thresholds. We all have drawdowns, that we don't want to go past, okay? So when I say, hey, pick one, I say don't pick the one with the highest win ratio, or don't pick the one with the most money. Pick the one that matches your personality the absolute best, okay? So E4 was the winner, but it had the lower win ratio. Now, why I say that is, let's just look at right here. Right here, you lost 6 out of 7, right? And you lost 8 out of 12, right? That's a rough batch, or 8. Is it 8 out of 12 or 7 out of 12? That's a rough batch of trades, right? And even if I go back, right, look at this right here. You got a pretty good losing streak. Now, why I don't think E4 is a good idea, it's not for the faint of heart. When you go through these losing streaks, when you lose 6, 7 in a row, what's the likelihood you're going to continue versus what's the likelihood you're going to abandon? The likelihood you are going to abandon is incredibly high right before you get a batch of massive winners, okay? So I don't think the average person, the average retail trader can sit through something like this, because you're going to have, even in this sample of 32 trades, there were 2 times where you lost 7 out of 10. That's rough. It's rough for anybody. It will test one's patience. So let's go over to E5, right? So E5 is where we're not letting anything run. We're selling everything at 8%, or it's going to hit our original stop loss. So it's funny how this averages out, where this one, because you have no big winners, you have no winners over 8%, actually makes the least amount of money. Your profits are going to be the least. Your win ratio is going to be probably the highest. And this goes to my classic, what I'm trying to say, don't get sucked in people promoting high win ratios. I think this case study should show you that the higher the win ratio, the less you're going to make per trade. All right. And usually these high win ratio systems, they have very high win ratios. The trades, the wins are so small, and then they have one loss that could wipe out 6 or 7 wins because the losses are usually much larger. They're selling win ratios, but on paper, you don't actually make a lot of money. You'd be better off doing something in the middle. So after talking to Ben and a little soul searching, I decided to go with EE2, right? I said, this is fitting for my personality. This is simple. This is something that the people that work with me, the traders that I teach, can fully understand, right? Even though it did not make the most money, it was actually made the 3rd most. But, I would say these are pretty even. This has a slightly higher win ratio, right? This is really just a 1 trade difference right here. But I'm definitely not going with E4 because I know the losing streaks are going to be too hard for the average person to sit through. I'm definitely not going to go through E5 because I trend follow growth stocks. I like growth stocks. I do not want to. It is more painful to me to watch a stock go up 135% without me. Right? I'd rather take a loss than sell too early. Right? And it goes back to one of my previous slides, leaving money on the table. So you have to find something that matches your personality, something that you can stick with over time. Right? Kind of that happy medium, happy ground. So we went, Ben and I went with E2 and we coined it. Actually, I think Ben coined it. I think it was your idea, Ben. Ben coined it the 508. I'll give credit where credit's due. And the 508 really stands for sell 50%, half your shares at 8%. Right? It's that simple. Right? And you know what the interesting thing about these rules are? They're incredibly easy. There's no indicators involved except for a moving average. Right? There's nothing other but price, volume, and a moving average. And you can easily update your stop losses once a week. Every Monday morning, if I have a portfolio of stocks, I'm not raising my stop like to trail behind the moving average daily, right? I'll just do it once a week. Like, I don't want to split hairs here. Right? I want it to be simple. I want it to be replicatable so I can teach traders this and so that you can easily do this yourself. 508 strategy was a winner. Now, let's put this into a greater perspective, okay? Income per trade. All right, so this was my income per trade in the first 20. First 20 trades, this is how much money I made on a per trade basis. Not good. I can buy my wife a good dinner every time I make a trade, but I'm trying to do more than that, okay? So after I said, hey, Steve, you're screwing up, you need to change your strategy, we went with the 508 right here. So on my next batch of trades, look how much more I made, right? That's like an 800% different, maybe 750, right? And just the difference between 2 batches of trades on an income per trade basis. And when I average it all out, when I average my 32 trades, $420 per trade, right? So who would not take $420 per trade? I think most of us would, right? Especially if you're doing that on a weekly basis. $420 per week in income, that's not bad. I'll take that, right? I can do things with that. So look, so when I take what I started with what I ended up, and keep in mind that even this number right here has 20 low average trades inside it. I made before 508, which is also E2, this is what I was doing per trade. After 508, all trades included, I made 276% more. 276% more. All I did was take myself out of the equation when it comes to making a decision on when I should sell the stocks. All I did. Systems stay the same, stocks stay the same, entries stay the same, everything stay the same. Just when it's time to get out, I took it out. I'll let the rules be my guide. And I made 276% more. And this was years ago. Ever since then, I've been using the 508 strategy, right? Because it's very, very, very simple. Now, before I move on, I'd love to answer some questions because I'm getting some good questions. Marianne said, why did you pick 8% over 10 or 12? Marianne, there are going to be, the short answer is years ago, way before I did this, I used to have a kind of a 10% rule, right? But what I was finding is a lot of, in more challenging markets, that a lot of stocks would not make it to 10%. They'd make it to 7 to 8%, and then they'd roll back over. So the logic behind the 508 strategy is I want a money management a trade management strategy, a profit booking strategy that's going to be successful in just about any market, right? That way I don't have to say, oh, we're in a stronger market. I want to go for 12% and mix and match and back and forth. And then you got to figure out what kind of market you're in. I like strategies that I can see myself sticking through in any market. Because again, that helps take the decision-making process out to figure out what kind of market you're in. Because there are some markets that you'll be begging, you wish you had 10%, right? And they just don't make it there. That was 2015. I'll never forget that year. The sideways market. That's when I said, you know what? Most of these stocks can't get to 10% where I want to take my profits. They're going up 8%. So you could most certainly do that, Marion, and tweak it to your liking. You'll probably have a lower win ratio because there's going to be those stocks over time that don't make it to 10%, and they'll roll back over. So what decision, well, was the decision based on the back test? Of the 8%, no, the 8% was based on my personal experience being in multiple market types, right? So perfect example, we had a great growth and momentum style market from October to mid-February. From mid-February to about a week ago, growth stocks are starting to come up, but it was a completely different kind of market, right? It was more of a value-based market. So, you know, again, I just want to pick a strategy that I believe can stick with most markets, because then I have to make more decisions on what kind of market I'm in. Okay, so E3 has one trade better than E2, but E2 has 3 trades better than E3, but still has a greater win ratio. This is just because of the average. Jose, I'll have to look at the numbers, and maybe you can email me, right? But it's just a spreadsheet that's calculating those. So I'll just have to look at that. I think my numbers are right, but send me an email at steven@thetradersplan.com. But E2 and E3 are very, very similar. And I like E2 better because the likelihood of you getting more 4% wins versus losses are a little better. Trent says, you need to look at thousands of trades over many of years. Sure. The more data you have, the better, okay? The absolute more data you have, the better. But here's what I know. No matter how you have 1,000 trades, okay? Here's what I know. I know that whether it's E2, E3, or E4, or E5, they're probably all going to be my discretionary. That's one thing I figured out. I know E4, the pure trend following, is going to beat them all with a lower win ratio. And I know E5, that sells it all at 8%, no matter how many thousands of trades in your back test, is going to make the least amount of money. Right? So no matter how many thousands of trades, I'm picking something right in the middle. I'm picking something that matches my personality, and it's worked well. I've used this E2 strategy, this 508 strategy for a couple of years now for the subscribers I work with, and they love it. They love it because it is simple. It's easy to replicate, right?
I think that's part of the, for the sample size, we've got to have something that people can actually digest. Like, so, you know, when we're teaching people, it's a little bit different than what we may have to do behind the scenes. We're trying to give something that you can understand and that you can digest, because if it was 1,000 trades, somebody would say, why didn't you do 5,000 trades? You know what I mean? There's no perfect answer to it. But we're trying to give you something that you can understand. Discretionary trading. We get those emails. All those emails come from people who are in E1. All those people, including myself. I stayed with discretionary trading longer than Steve did because, honestly, I was just a less experienced trader. The point of this is, if you use an automated profit booking, it's so much easier for the soul. It's so much easier to teach, and it's so much easier to scale than if you're just saying, I think it might go up this time. It's rough. So we got to think about, the best place to put our people for the best chance of their success.
Yeah. And that's what, again.
But I agree. I mean, it's a small sample size, but it's a teaching process.
Yeah. And like I said, even if you have 1,000, there's a couple things I know is going to happen. E4 is going to have the lowest win ratio with the highest overall net gain. E5 is going to have the lowest win per trade. It's going to make the least amount of money. E2 and E3 are going to be in the middle. That's one thing I know for a fact, no matter where we're at, right? Because E4, the big one, if you do 1,000 trades, you're going to hit some massive, massive winners, right? And it's going to swamp everything else. But I don't think it's not for the average person.
That losing streak, I mean, we get everybody loves the winner. Half of them don't say anything, but the losing streak, that's where we get the emails.
Yeah.
So if we're losing 50%, people are jumping ship. They're abandoning their whole system, every bit of logic, because of fear. So we've got to keep them, everybody on an even keel so they can continue, because that's what's best for their overall portfolio. Not abandoning something because they, got scared of some losses. That's what the average person will do.
So it goes.
It's a balance.
Well, it also goes back to do what you're comfortable with. Pick a strategy. It can be either one of these. I hope, if it's not 508 or E2, I'm completely okay with that. But when I say pick a strategy, I always tell people, pick a strategy that not only can you see yourself through the winning streaks, because we can see ourselves sticking with any strategy as winning, but pick a strategy that you can see yourself through losing streaks, right? Because that's when you're really tested, okay? Because if you can't sit through, if you say, hey, I want to make the most amount of money possible, but can't sit through a 40% drawdown, you're going to abandon ship when you're down 30%, right when it's about to turn and make you a boatload of money. So whatever your personality is, that's what you should do. So kind of moving on a little bit, and, to really talk about, how much money to make, right? So what I did was I said, okay, let me take these 32 trades. You can see the 32 data points right here, right? And you can see the first 20 right here. And then the next is when my profits really started to take off, because I was following rules. And you can see how much more money you made. You could make from the beginning. So E4, the true trend follower, makes so much more, right? Versus, just any other strategy. You're going to make so much more over a large number of trades. But look, it is going to be skewed by a couple really big ones. And boy, there were a couple really big ones. Okay? So, and then you have my results. You can see my results were up, a little bit, made a couple $1,000s after 20 trades. And then I decided to follow a rules-based approach. And then all of a sudden it took off. Okay? And then you have E2 and E3 are going to be very close. Again, whatever you're comfortable with. And then E5, that's where we're selling all at 8%, made the least amount of money. Even though it's going to have the highest win ratio, right? Because you don't have any big winners, right? So there is a huge opportunity cost difference, right? And I'm going to show you that opportunity cost. So look, now I have the E2 strategy. This is the 508 right here. Okay. So I said, okay, after what would have happened, right? What would have been my account balance without the 508 and during the study? So you notice the first 20 trades are the same, which is why you don't see the blue line, right? Because the balance are the same. Then all of a sudden, after the first 20 trades, I decided to implement it, and look how much more money I started to make, right? Versus if I would have kept my same path for the next 12 trades based on the average of these 20 trades, right? There's a $10,000 difference in just 12 trades, okay? And again, I understand the whole study is 32 trades, but dang, like I think the visual should paint the picture. So because I did this study, all of a sudden, after 20 trades, my balance just absolutely went the other direction versus if I would have kept doing exactly what I'm doing. Now, imagine if I had a chart to look at the next 30 trades, right, based on this average. I mean, you talk about a huge opportunity cost, a huge long-term cost, right, of not doing something like this, of continuing to, buy stocks that, you hear on TV, but have no idea when to sell because they don't tell you when to sell. Even if you have a discretionary entry system, say, I'm going to buy the stocks I want to buy. That is completely cool. But if you have a system on when to exit, if you complement that discretionary entry system with when to exit, you can make a lot more money. And I'm assuming you're buying, some high quality names, right? We're not. This isn't value investing where we buy something that's been down for 3 years. We're buying growth stocks here. We want our accounts to go up. We want our income to go up. Does that make sense? So here's how we use it, right, with some of our strategies. So we take this highly profitable 508 profit booking strategy, which I think you would agree is pretty easy. Sell half at 8%, raise stock to break even, let the rest run. We complement that with our top performing trading system, which is also super easy, right? You have one with the other, income for life, right? We marry the two, right? And this is what we came up with. So now I just taught you my top profit booking strategy, automated profit booking strategy. I'm going to quickly go through one of my top income strategies, one of my top trading systems. So, and I'll explain this to you. So I gave you the rules to the profit booking strategy. Now I'm going to give you the rules to the trading system so you can marry them both. So right here, this is a chart of FUTU, and I get charts like this all the time, just like we get emails all the time on when to sell, right? We get email on when to buy, right? But mostly when to sell because they've already bought. So I get this email from this trader that says, hey, I bought this up here. What do you think? Right? And obviously, I think most of us would agree, we don't even have to look at what happened over here, that you're probably buying this extended. I bet some FOMO kicked in. I bet he saw this, somewhere on TV where the stock just wouldn't stop going up. So FOMO kicks in. And usually what happens when you buy a stock when FOMO kicks in, right, then it really, really starts to correct, right? The eventual deep correction happens. Now, I don't know, this trader used a 10% stop loss and he walked away from it unscathed. But if he didn't, right, he had to sit through a major, major pullback. And that sucked. But you know what's interesting is I just taught you the profit booking strategy. I want to teach you how to buy at the optimum price. So we are buying high quality stocks on a pullback. Okay. So instead of buying up here, this is the signal bar that I'm about to teach you, right? Buy at the following open, make some money, probably get stopped out on the pullback, but then boom, it tells you to get right back in. And then this chart is a little older chart. It continues to go up and up and up, right? But the point is, we're going to focus on the signal bar real quick, and I'm going to show you a trading system real quick that you can complement with your automated profit booking strategy. This system is so easy, you can literally write it on a Post-it note. So I challenge you, if you're at your desk, get out a pen, get out a Post-it note, and write this down, okay? So again, we are buying high quality stocks on a pullback. So I'm going to walk through these rules one by one, just so you can get a concept, a grasp of what it is we're doing and how we're using the 508 strategy. So this is our entry system, right? I already taught you the exit system. So right here, these are the rules. This is a weekly chart, by the way. This is CrowdStrike, okay? This is our sample. So this is our signal bar. This is the reversal bar. Now we're looking for swing low points on a chart, okay? So you have a pullback, and then all of a sudden you have this reversal bar, right? Signal bar. So here are the rules. The weekly chart must undercut the prior 3 weeks. That means the low of this low needs to be lower than the previous 3 weeks. Check. 1, 2, 3, check. These don't have to be down in order, right? This one could be higher than this one. This one could be higher than this one. This one could be the low. It doesn't matter the order of the previous 3 bars. As long as the low right here undercuts them all. Now, why do I do that? Like, well, I mean, how many times has a stock started to roll over and pick off your stop, and then it turns around and goes the other way, right? I mean, if you've been trading long enough, it happens all the time. It's the cost of doing business, right? So one thing I learned, and I'll actually quote Martin Pring. He says, a false breakdown is usually an above average move the other way. So you have a stock that picked off stops, frustrated traders, and then reversed. So it falsely broke down and then reversed, and it usually means an above average move the other way. All right, so we're looking at high quality stocks that tried to break down, failed to break down, reverse, and can slingshot it upwards. Okay, so rule number 1, very simple. Rule number 2, this weekly chart must finish positive, right? Now, why do I do that? I want there to be enough conviction in the weekly bar for it to at least finish positive, right? Close above the previous week's close, okay? So it doesn't have to close above, the 3-week high or anything like that. Like, I just want it to close higher, right? And the reason that is because I'm not looking for a reversal bar that looks like this, right? If this bar was down here and it came off the lows and tried to reverse, yes, it undercut everything, but there's not a lot of strength in a reversal bar that looks like this, right? High prone to failure, okay? So I will need there to be enough strength, all right? So rule number 3, must have above average volume. I'm going to go to the next chart for this. Volume is incredibly important. So when you have a volume bar like this, or a volume bar like this, or this, that's not you, me, or your grandmother up the street buying shares. It's not. It's not the retail traders. It's the smart money, the pensions, the mutual funds. Interesting fact about mutual funds is when they initiate a position, it usually takes them 3 to 6 months to complete their position. Now, why is that? Because they can't buy it all in one day, because they will increase their average price per share. So when the stock goes down to a price they're comfortable with, they start to nibble, right? And it could be several pensions or mutual funds start to nibble, right? Get your above average volume. And then if it takes 3 to 6 months, as retail traders, you and I have the flexibility to get in and out and just ride their coattail all the way up. Okay, so 3 very, very simple rules. Now, I just plot a 50-day moving average on this bar right here, right, on this histogram. And if it's above the line, it's above average. If it's below it, it doesn't. Invalid pattern. Okay, now there's not a line over here because there weren't 50 periods yet, right? Because it was a recent IPO. There weren't 50 weeks. But you can clearly see that out of everything around, this is above average. Okay, validates. This is actually a trade we took, and we made a lot of money with it. Okay, this is the low of the March 2000. All right, so some very, very simple rules. I'll repeat: weekly chart must undercut prior 3 weeks. All right, write this down. This low must undercut the previous 3 weeks. 1, 2, 3, check. Must finish positive. Rule number 2, check. Must have above average volume. I want conviction. I want to be in the same trades as the smart money is, because they have to take time to slowly get in. And they can slowly get in and slowly get out. I can quickly get in and quickly get out. I'm not moving the market. They are. Okay? Very easy pullback system. And we use this and we complement it with the 508 strategy. So here's another chart. I want to show you one more example just to show you how abundant these patterns can be, like how many we can actually find. This is a chart of Amazon. Everyone's heard of Amazon. I challenge you to look at any chart on your watch list, absolutely any chart, and put on a weekly chart and at least just go back 2 years, right? Just 2 years. Look at the swing low points. Look at how many times you can find these swing low points, this pattern at swing low points. Check this out. You got a weekly reversal, right? Above average volume, enter, nice little income trade. Pulls back. You got another, made a little, nice little trade. And you got the mammoth, right? This was, again, at the March low of last year, but look at this skyscraper volume. This was my first trade off the low of the coronavirus bear market, okay? And I took it. And I took it because, I mean, imagine you have an $1,800 per share stock and it traded 50 million shares in a week. Then I don't know if you got a calculator handy just to multiply 1,800 by 50 million, just to show how much money piled into that, right? That gives me all the confidence in the world to buy at the open the very next week. All the confidence in the world. Because what's happening is when these guys take a position, they're not going to turn around and sell it the next day. The next week. They are taking long-term hedge fund mutual type positions, right? And if there's enough of them, which right here there was, this isn't one guy right here, right? This isn't Warren Buffett. This is probably 100 to 200 mutual funds piling in, adding to their position or initiating one, right? We wrote it all the way up. Got stopped out on this bar. Interesting thing, very next bar gave us another buy signal. All right, this arrow should be here. Told us to get right back in, and we did. Made just a little bit on this one. Made a lot on this one. Made a little bit on this one. And then it did it again. We actually didn't buy this one because my system told me that another setup was better. But we bought these two, and we made money on both. But you can see all 5, and maybe even say 4, since this one's been going sideways for so long. 4 out of 5 made money. This trade probably is now in the money. After several months, it's been going sideways. Still, 4 out of 5 isn't bad, right? So this has been the Monday morning performance over the since the beginning of 2019. So I've sent out 89 Monday morning alerts. 89 Monday morning alerts, 64% win ratio, 57 winners. The average trade of these using the 508 strategy, the average duration lasts about 4 weeks. You could have up to 4 to 8 trades on at a time. At the moment, we have 3. I've had up to 9, okay? You want more trades. That means you have some stocks that are continuing to run, right? I like to be in these stocks a long time. That means they're going up. The annualized rate of return over the last 2 years has been average annual rate of return has been 46.5% per year versus 25% per year for the S&P 500. So you almost double the market performance by spending less than 20 minutes per week, right? 20 minutes per week to find these setups, okay? Not bad at all. Now, one of the big questions is, do you trade options? This is a stock trading system, and you complement it with a money management system, right? The 508, do you trade options? Yes, I do. I have some people that take my alerts. They trade stocks only. They trade options only. They trade both. I personally trade both, right? Because it's a nice little extra income trade. So this is just a perfect example of CrowdStrike, right? We entered the stock at 60 and the call option at the same time. We're going to sell the call much quicker. right? Because of decay. We're not going to hold it for months and months, because if our stock runs for 4 months, we're going to run out of time. So it's just a kind of a quick boost, right? Quick way to add some income, right? And we were stopped out for a very, very nice gain on this CrowdStrike. Now, yes, we got stopped, picked off, and it continued to go higher, but that's fine. I made a lot of money, right? But this is just kind of a classic example where you can buy the stock and you can buy the option. Now, for the option performance only portion, right? Because I have some people that just trade the options. This is what you would have made, going back to the beginning of 2019 to current. If you would have started with started with $1,000 and just bought one contract, right? You would have ended up with $4,662. If you would have started an account with $2,500 and bought 3 contracts per trade, you would have ended up with $13,985, right? 5 contracts, started with $5,000 account, started with a $5,000 account, $23,309. So I don't know where you fall on the spectrum, on this graph. I don't know, right? This is the beginning of balance. This is the end balance based on the number of contracts you trade. But it's been a pretty good rate of return on the options as well, right? And you can do this with fairly small accounts if you want to trade the options only. So the rules-based, here's why I like rules-based systems. Rules-based systems really take the emotions out of trading, right? They do. They take the decision-making process out of trading. And by doing that, they're designed to give you more freedom, right? Because you're not sitting there thinking or staring at your screen trying to figure out when to get out. The smart money uses them because they work. I read something the other day that 70 to 75% of all volume on the New York Stock Exchange is automated trading systems. They don't do it because they lose money. They are taking the human error element out of the equation. Keep drawdowns limited, right? I like to keep drawdowns limited. I'm a young guy, but I work very hard for what I've accumulated. Right? You've worked very hard for what you've accumulated your entire life. Why sit through another 50% pullback or another 50% correction like we did in 2000 and 2003, like we did in 2007, 2009, and like we did last year when we sat through a 35% drop in 3.5 weeks, right? I don't like that. So that's not how I trade. I'm going to move to cash. Rules-based systems also allow trading to be a money-making business, not a hobby. I think this is very, very important because you have a rules-based approach. You have a trade plan, right? Just like businesses have a business plan. They write the business plan and then they execute. All they got to do is execute. With a trade plan is the same way. You create your trade plan, then you just execute the plan. Okay? So you got to take your hobby hat off and put on your money-making business hat on. So this was something Scott sent me not that long ago. He said, I sold half at 8%. He's talking about the stock. And I've been rolling the remaining ever since. Currently up 198% on close position, 220% on open position. Tremendous trade. He traded the stock and the option. This is the stock. This is the option. These are a bunch of video testimonials that people are sending me, okay? So this Scott was very happy. So if you want me to do some of the heavy lifting for you, if you want to learn more about the weekly income system, let me tell you about it. Let me show you what I got. So the weekly reversal system, the complete system, right, from 2019 to present, on average, you can see that it has earned approximately $422 per week in income. It only takes 20 minutes per week to execute. I give you the scan codes, and we're going to talk about that here in a minute, how easy it is. 3 rules. You saw the trading system. Very, very very simple rules to keep you out, okay? Or excuse me, 3 rules for every trade. Very simple to implement. So not only do you get the full course, you get the full scan codes, you get the real-time alerts. So it's very, very important for me, the people I work with, for those who want to, I want to teach you how to fish. I want to make sure you understand the system, because if you understand the system, you're comfortable with it, right? You're more likely to execute the trade, okay? So with the real-time alerts, like this allows you to learn while you are This allows you to learn, allows you to see what alerts I'm picking while you're learning, right? Allows you to go along with it. So in all my real-time alerts, I deliver them before the market opens every Monday morning with very specific targets and stop loss. Like, for example, DraftKings, I can send this out 30 minutes before the market opens on Monday, estimated at $50. The target one is 54, which is an 8% gain. We're going to sell half, and we're going to have a 10% stop loss. Okay. Very, very specific targets on the alerts. Okay. So you got the complete rules. This is the weekly income average, and I think I'm about to answer a question. So right here, you can see that if you would have put 5,000, the blue is the stocks, the yellow is the options. This is combined. So if you would have put, $5,000 in each stock, right, taking every trade, you would have averaged $156 a week. If you would have started an options account with $5,000, right, and taken every trade, then you would have added an extra $109 per week in income, $265. Now, I have traders that trade so much larger than this, but I'm not going to go too large. So let's say you put $10,000 in each stock trade. That's what you would have averaged per week over the last 2 years. All right. I would kept the option number the same. So if you would have started with a $5,000 account, right, that would have been your weekly income on the option side, and then combined $422. Right. So it really depends whether you trade 5,000, right? Either option, you set aside $5,000 for your options account. Whether you put in $5,000 per stock or $10,000 per option, this is the difference in the weekly income average. Okay. Taking every trade, follow the rules. So here's what you're going to get. If you want me to do some of the heavy lifting for you, you're going to get the completely, I went more into detail on the 508. You're going to get the complete weekly reversal system plus scan codes. I have scan codes that I give you, right? I'm not holding anything back within the course, within everything. You get the scan codes, and I'll show you how to use them, how to narrow down the list. In addition, while you're learning, right, you're going to get my reversal alerts as well delivered every week before the market opens. Okay. So you get the course plus the scan codes. You're going to get the alerts. Huge value right there. Now, as a bonus, I like to, every Tuesday morning, maybe you want more than one pick a week. So every Tuesday morning, I send out my top swing trade setups video, right? And also almost everything I send out is before the market opens. So I'll look at our portfolio. I review our portfolio of stocks that we own. And then I look at, some potential setups. So I usually send 5 setups that I like throughout the week, and I give very specific entry and exit targets, right? Now, in this Tuesday morning setup, in this Tuesday morning blueprint, right, I like aggressive stocks. Like, we're really going after some aggressive stuff. We caught right as it was crossing above $4. Now, did I know it was going to go up to $60? No, that's silly. But I took a screenshot right out of my inbox that says, this has a beautiful cup with handle with a potential buy point around $4 breakout, right? This is what I sent to my subscribers. The very next day, it broke out above 4. We went in, we made a lot of money. Again, do I expect to do this every time? Absolutely not. But these are the kind of aggressive stocks that I do send out in my Tuesday morning setups. So as an extra bonus for the first 20 members, I want to give options alerts free for 1 year. So not only do you get everything that's included in the weekly reversal course and the alerts, I'm going to give you 1 year of option alerts free so you can do them both. So recap, you get the weekly reversal course plus the scan codes, right? You get the weekly reversal alerts that I'm going to deliver. You get the weekly swing trade setups blueprint, okay? This is the Tuesday morning video that I just talked about with Riot. And then you get option alerts free. Now, because this costs me more to send out, I can only give this for the first 20. So if options are important to you, you might want to go ahead and take a stab at that. So huge value, guys, $3,688. Now, if all this did was just add an additional retirement income, would that be worth it? Or how about just finance a few trips on your bucket list each year, right? I like to travel. Would that be worth it? Or what about if it allowed you to retire more comfortable than you thought you and your family thought was possible? Would that be worth it? Right? So everything we talked about, everything that's included, you get the weekly reversal course plus alerts for $267, right? This is an annual subscription, right? You get the options alerts for free. I'm throwing this in for free. You get the swing trade blueprints. You get the system. You get the alerts. Right here, you can go to thetradersplan.com/checkout-W. I'll open it up for questions here in a second. And I'll drop this in the chat box right here. If that's something that you want to do, I'd be happy to work with you. Again, I can only do option alerts for the first 20. So if that's something that's important to you, I'd go ahead and take a stab at it. I just dropped the order form in the checkout box. Again, this is a secure order form. thetradersplan.com/checkout-/SWLNT. Okay, everything that's included. It's huge, huge value. Now, and here's just something else, while you're thinking about that, while you're placing your order, Richard sent me an email. He said, I dropped 20 grand on a reversal for Sportsman Warehouse, popped 44%, sold it all for crazy gain in 2 days. Love the reversal strategy. 91.1 win ratio of 91.1% on all my trades to date since I started 3 months ago, 40 trades or so. That is awesome. This guy is stoked and he's making a lot of money from it. So again, that was Richard. He emails me all the time, but I love seeing these success stories. So I understand there's a lot of news, and even though I am a anti-news, kind of don't pay attention to it, don't make decisions based on it, but I understand that there's a lot of uncertainty out there. So here's what I want to do. Trade it for 30 days, and if it's not for you, you can just send me an email and request a full refund. The only thing I ask is that you must prove that you have taken one trade. Send me a screenshot of one trade, right? Got to take one trade. Or I understand that most people don't want their money back. They want help with trading a successful system. So here's my next part guarantee. If you haven't made $1,000 in 90 days, right, 90 days, I will personally mentor you one-on-one until you do. So the cost is $267. So if you haven't made a return on your money of approximately 350% or almost 4x your subscription guarantee, your subscription costs, in 90 days, I will personally mentor you until you do. Send me an email saying, hey, Steven, I haven't made money on this or for whatever. 9 times out of 10, it's just a few tweaks I can make to help you out, and you are good to go. Okay, but I'm happy to do that because at the end of the day, I'm looking for long-term relationships here. So there's something that's everything that's included: the weekly reversal course plus scan codes, the alerts, the Tuesday morning swing trade setups blueprint. That's a video that I put out every Tuesday morning, and I'm going to throw in option alerts free for the first 20, and that's $267. So just go check it out. I dropped the order form in the checkout box. You have it right here. It is a secure order form. And I will open it up. Ben, did I miss anything?
No, not on the presentation. A few questions coming in, but when you're ready for those.
Okay, so let me try to got some questions about the back test. Well, it's not a back test. These are real live alerts. So please show the 15-year CARG and Sharpe ratio. Hey, so in this study, these are real live alerts. So I sent you what I actually made. So back tests are great and all fun and dandy, but sometimes they can paint a rosier picture. So I thought it was best for the customers and the traders that I work with to just send what I've actually done. Right? I don't have a 15-year back test on this. I have the actual results of the last over 2 years. You do these on quality stocks. What is the screening criteria? That is all in the scan code. Okay, so we're going after momentum-based stocks. There is a list of 15 things in the scan code to make sure that we're pumping out some high-quality stock. Okay, what is the max drawdown 2007? Again, I'll only go back to when I actually traded this. Right. Very good, complete, clear presentation. Very well delivered, regardless of the offer, regardless of taking the offer or not. Many thanks. Hey, you're welcome. And Marion, I appreciate the comments too. Yeah, so I'm seeing some orders come through, and I'm really looking forward to working with everybody and working with you guys. Just continue to let me know. If you have any questions, I'll sit here for a couple more minutes, and then we'll just go from there. Because I think I've answered most of them. All right, 5K per stick plus 4 sticks. Yeah, so on the question about 5K per stick times 4, yeah, it was more of on a per trade basis, not a portfolio balance. That's what you're asking. Any other questions? I appreciate the compliments. See some people coming through. Great. If you do have any additional questions, you can always email at me at steven@thetradersplan.com. If you want to make sure if this is right for you or not, any additional questions, but I'm here to answer them right now to make sure that you are, I'll drop that in the chat box.
I think you did a good job, brother.
Oh,
The big thing here is, you know, we threw a lot out at the end, but having an automated profit booking strategy versus discretionary, like I really hope that early part of the presentation sunk in, because it could be such a nightmare to watch them get away, and it's just so much easier and so much more profitable. If you haven't done it yet, if you're not using an automated profit booking strategy yet, you will eventually. Or you can struggle like I did for a lot longer than you should.
Okay. Well, I wish everybody a great long weekend. I know it's sunny for now where we're at, so we're going to try to enjoy it. Again, go to the order form right here or the one that I dropped in the chat box. And I look forward to working with the people that have placed the order. So I will see you on the inside. All right, everybody. Have a great weekend.